Good afternoon, everyone. Welcome to day two of the Research Analyst career track of the Philippine Junior Finance and Investment Summit 2021. Thank you so much for joining us this afternoon. So many nice things happening. Yesterday, you got an overview of the research and investment analyst role from various practitioners, and you learned key points on top-down and bottom-up analysis. Today, we'll have some sessions, and tomorrow we'll also have day three, and not to mention Red Taylor's version is also coming out. So much things to look forward to, really. So if you want to post about the PGFIS 2021, please don't forget to use our official hashtag. So whether that's on Facebook, Instagram, LinkedIn, TikTok, it's hashtag PGFIS 2021. Hashtag the future starts now, and hashtag CFA Society Philippines. You can also tag at CFA Society Philippines in their official social media channels. And just to remind everyone, we do have an evaluation form, and that's through the CFA Society Philippines mobile app. The evaluation form is at the end of each day, and that's part of the requirement for you to get the e-certificate. And please don't forget that you need to attend 70% of the entire summit. So that's at least 13 sessions to get the e-certificate. So yesterday, what the role of an analyst is like, and then key points of top-down and bottom-up analysis. Today, our first breakout session will help you discover how you can present your analysis more effectively in a report. So the title of the session is Basics of a Research Report. And here, Mr. Frank Viernes, CFA, will share how research reports with maximum impact are prepared. So Frank currently serves as the head of data analytics for one of the largest property developers in the country, MegaWorld Corporation. Prior to this role, he served as the chief analytics officer and chief data scientist of one of the fastest growing fintech startups in Southeast Asia, Advanced Tech Lending. Before that, he served as the pioneer of the analytics team of the largest property consulting firm in the Philippines, Lee Chu Property Consultants. Before that, he served as a department head of a global property consulting firm, Cushman and Wakefield. And then prior to that, he served 8 years as a content manager of a financial software company, FactSet Philippines. His professional experience spans finance, real estate, and technology. He is also a resource and a conference speaker with engagement on a global scale, and teaches finance and data analytics at the Ateneo de Manila, De La Salle University, the University of Santo Tomas, the University of Asia and the Pacific, Southville Colleges, and Southville International School, affiliated with foreign universities. So without further ado, let's give a virtual round of applause for Mr. Frank Viernes, CFA. We're all very excited to hear your insights today, sir.
Thank you, Sevi. So let me share my screen. So that's a very generous introduction. So a lot of you guys who have been my students in UST actually would probably know how to conduct this, but just an FYI pala, actually we have here our host Miguel has actually been a coach of the series of champion for research. And of course, I think we will ask for his insights later, but right now, we will be talking about the basics of a financial report. And basically, these are the components that we want to be looking at a research report in order to deliver the message that we want. So without further ado, let's begin. So what we will be discussing are, of course, we have an introduction. Why are they important? We have the basic parts of a research report. And we also have an actual example. And of course, we have a Q&A. So let me, okay. So with that, let's begin. All right. So the importance of an equity research paper. So of course, number one is, well, at a very intuitive level, research reports are very important. So you've probably had a discussion on how important it is to, or the career path of an equity research analyst. But with this one, it's mainly to inform them of the investments that they have. So for example, is this a good investment? This is my opinion. That's at the most basic level. Yun lang yan, right? But another part that is actually, I don't think that everybody or a lot of our readers would look at it this way, is actually to lessen the asymmetric information. When you're doing your research, this is one of my advice na, you can actually reach out to the investor relations. Now, a lot of times when we're talking about asymmetric information, this is a phenomenon that occurs when one person or one counterparty has more information over the other counterparty, right? So, like for example, in this one, kaya maganda tong imbalance na to, di ba? Most of the time, it's actually the buyer. So let's say you're the buyer of a stock or you want to buy a stock, you probably know less than the one selling the stock. So the investor relations, they have access to information that even though you are very diligent, you are searching the internet very rigorously, you cannot find that, right? Or unless siguro you can piece together the information, but that's not always possible. So when you reach out to the investor relations, they would give out some of the information na, well, not really private or not really confidential, but it's just that wala naman nagtanong and wala rin namang nag-feature sa news. And therefore, this is what we think. This is our plan. Then when they give that to you, you write down in the research paper and then you disseminate it to people who would be more informed. And therefore, the asymmetric information, although not perfectly gone, is lessened. Okay, so that's one very important but undiscussed benefit of having an equity research report. So, okay, we will put that two things in mind, diba? Just really to inform and to lessen the asymmetric information, because the way my presentation will go will revolve around this one. Diba? Of course, every time naman we say this is a very important part, you have to answer why. Why is it important? How does it advance our goal? Diba? Very important. Yeah. But yeah, so let's begin. So of course, it's very important. First part, basics of research report, stock information. So kailangan nakalagay doon yung stock information, the name of the stock code, valuation date, and the industry. So okay, all of these are kind of important, but let me explain why. Well, of course, name of the stock and the stock code, medyo kailangan dalawa sila. And the reason for this is that you're probably aware that a lot of our investors are a lot of our stock investors are actually foreigners, right? So highlighting that's why important then see foreign exchange. That's actually one reason for it. But because of that, you will probably encounter a lot of stocks that has the same or stock that have the same stock code as the other stocks from other countries. So for example, TEL, diba? TEL for us is PLDT. But if you search TEL, there's also a TEL in Tel Aviv, diba? So you don't think about it this way, but it's actually very, very important. You know, they look at that, but that's kind of like the obvious. Siguro what I want to focus here is the valuation date. So let's say, for example, you're writing a research report, you have to indicate that this research report is my opinion as of November 11, 2021. And this is actually very important. Now, why? If you think about it, it's possible that up to this point, all of the information, you are very diligent. CFA ethics, diba? So very diligent, you've done your exercise, your due diligence and fiduciary duty, right? Something like that. So while you're doing that, and then you're giving out your valuation, something happened after November 11. So let's say, for example, something happened, it's a good news. And therefore, you haven't incorporated that because you were valuing the stock on November 11. Then that tells the readers that number one, this information which was revealed November 12 or November 13 or November 14 was not visible to me, and therefore I did not factor that into my target price, upside and downside. Okay, I did not factor that. Or it can be the opposite. Something bad happened, and therefore your valuation is very glowy and very promising. Of course, if that happens, and you didn't indicate the valuation date, then what would happen is that your credibility might be well tarnished, right? So it needs to be exact. Like what date? right? Of course, the industry, because later we will use that, and of course, other stock info, including shares outstanding, daily volume, etc. Those information might be important for some, so we really have to look at that. But for example, the daily volume that tells you if the stock is liquid, right? So you probably want, and for a lot of investors, liquidity is a key point. So it's possible that that's something that they look well assessed or include in their assessment. Of course, target price, upside and downside, right? So we'll discuss the valuation methods that we have later, but it's important that at the beginning, kaya siya nandito sa slide na to, kita ka agad siya. Another is, okay, so after the basic stock info, you need to have kind of like an executive summary. The executive summary is, well, for all intention purposes, telling why you recommend or not recommend, or maybe just give a hold recommendation to the following stocks. And of course, along with your recommendation, you must disclose 3 strong reasons. Now, the executive summary is actually a very, very important but undiscussed, portion, because, guys, in fact, if you've seen a lot of research report, and I do hope that you'll have something like that or review it after this presentation. A lot of our readers are probably business executives, but they have the money to invest or to buy a particular stock, and they don't necessarily have all the time to go through your 25-page research. They just need to know whether it's a buy, and they need to know why you said that it's a buy. So the 3 reasons here that we have highlighted are your 3 strongest reasons. There may be many reasons to recommend a stock. It's like the perfect stock in your eyes, but you just need to highlight the 3 for the reason that we have mentioned earlier, where they don't necessarily have all the time, and you need to be concise to get their attention. Otherwise, well, you fail at the exercise. You're doing a research report because you wanted to communicate the value. And if they get bored and they don't really understand why you're recommending it, then you failed at the first part. Okay. So if the recommendation is given, make sure that you support it with the 3 strongest reasons. So that's hopefully the second portion. Later we'll have an example. Okay. And of course, the business description. So with the business description, this is important. So the segments, the shareholder structure, and the main activities description. This is very important for the reason that if you recommend, let's say, a stock, you want to be recommending a stock because it does what it's supposed to do. Okay, that's a very important part. So I'm going to repeat it. You want to recommend or not recommend a stock because it's performing well on something that it's supposed to do, and the segments in the main activities description are 2 things that actually tell something about that. So what is it in that scenario? Okay, so you don't want to recommend a stock because you're expecting the stock to have a very high foreign exchange gain or a very high foreign exchange loss when it's not into the business of foreign exchange trading. So for example, consultancy pala yung company, or car manufacturer, pwedeng nag-export. But let's say it's a consulting company in local lang, right? And then you're saying, oh, they're expecting a huge foreign exchange gain, so therefore I recommend a buy. No, you shouldn't. You only would recommend a buy or a loss only if they are performing in the activities that they are mandated or supposed to be doing anyway. Right? So the main activities description segments, if people, so yun na yung mga after na executive summary, di ba? And they want to be detailed. Okay, ano nga bang ginagawa ni company na to? What is it that they are really doing, or where are they supposed to be earning money from? Okay, so segments, main activities description. Of course, the shareholder structure is also important because, it's very dramatic. I don't know if this happens a lot in the Philippines, but if you've been watching a lot of US series, guys, you probably know mga proxy fights, yung mga takeover. You want to be able to know if there's a particular shareholder that can influence a particular, let's say, the stock price movement because of the movement of that particular shareholder, the activist shareholder. But siguro to more practical reason then, you know, there was a time that there was this bank stock. I think I'm not gonna name the bank, okay? But the bank suffered is a scandal. Well, our bank suffered a lot of scandals naman din. So hindi naman ako nagpipinpoint kung sino siya. Now, in that particular bank, after the announcement, it's actually a very huge scandal. Then the day after the announcement, you would expect that, diba, that news would impact the share price, but it actually didn't move. It actually increased pa nga by a little. Now the reason there is that not a lot of our banks stock aren't yung float nila aren't really that high, meaning that most of them are really much owned by the officers. So therefore, kung di naman sila nag-sell, di naman talaga galaw yung stock price. So you want to be able to know if something like that is also in place with your stock, so that you have an assessment whether or not it's prone to good changes, right? So this is an example of that. So this I think is Murad. We'll be using the 2014 champion for IRC Investment Research Challenge, and this is found in their research paper. So you can see here on average 99.2. Okay, of the total revenue derived from the sale of electricity. You want to be able to understand that, okay, then anything that affects the sale of electricity is potentially dangerous. Dun mo siya i-frame kasi 99.2 of your revenues are really earned from there. Now, of course, it's different kung holding company. Holding company, it's a very diversified one. May business sa water, may business sa real estate, may business sa investment. So, in that sense, it will better frame na, okay, then you have to discuss extensively, but then hindi siya ganun ka unstable if one of the industry is, happens to be affected, right? So yeah, it's very important that you understand it. And of course, that's kind of linking to the next portion. Of course, ito na yung parang company strategies. Also, the reason why, di ba sabi natin kanina, company description, we want to be able to reward the company for doing what it's supposed to do, okay? And also the shareholder structure as well. And actually the corporate governance, nasa later pa yan, will tell you if, for example, if this CEO resigns, who's next in line? Are the management capable to run the company strategy? Kasi if the shareholder is rewarding the company for good implementation of strategy, then you want to be able to ensure continuity. Right? So at the end, company strategies, naka-part siya. All right, so yeah. And of course, here, nilagay din niya to so that any time that the company performs well in achieving the strategy, you might want to recommend the company. Sabihin, okay, they're fulfilling their long-term mandate. They're almost close to reaching this. It's a buy. Or it's a sell because it's been 5 years and nothing has been moving in this particular strategy. Okay? Of course, ito, the shareholder structure owned by 3 major shareholder groups and the public, all right? So 50% of the common shares, so ibig sabihin Beacon, almost kind of like the the major one, whatever that company votes goes. And the corporate management, of course, so yeah, chairman of MER, okay, MVP. All right, because again, and you know what, this isn't really discussing a lot of formal strategy, but or investing strategy, but you know, it's a spoken rule that sometimes people buy into the management more than the company. So for example, kaya nga guys, di ba, if a new announcement of a new CEO of a company, di ba, tumatalon yung share price because sometimes they buy the shares not of the company but of, or rather it's a testament of I believe in this leader. So if you believe in MVP, then kapag may hinawakan ulit yung company, prices would go up. That's kind of the public sentiment. All right, the next one is the industry overview and competitive position. Well, this is actually very important. So kanina, I've kind of heard that you've had a discussion of top-down and bottom-up analysis. So here, when you're discussing the industry overview and competitive position, it's kind of like top-down, right? So you're discussing the, okay, ano ba yung see here? Macroeconomics, and then the industry position, because you want to be able to understand if the forces that surrounds the particular industry that the company is operating in is having difficulty growing, for example. Okay, and of course, sometimes there are a lot of industries na if that industry go, of course, beneficiary yung company. So you want to be able to understand if that growth or you're expecting some growth in the industry over, siyempre matatamaan ka doon, especially if you're the big player. So for example, ito, meron tayong example in a while, which is this one. All right, so in this one, the power sector, we all know that Meralco is a very huge player. Of course, sa kanya, napaka-important nito. Maybe in companies that are not really significant movers, maybe it's not as obvious, but definitely for Meralco, or let's say you're doing Manila Water, that's very apparent. So here, due to an improving economy, all right, electricity demand is expected to increase in the future. But you control majority of the electricity demand. So therefore, it's like saying that your revenues are expected to increase in the future, right? So dapat may linkage siya. Another unspoken rule, but I guess we're discussing basics naman eh. At the end of the days, guys, so here you're gonna discuss a lot of macroeconomics variables. So meron dito inflation, how does it affects your company? Is your company a company that has a lot of market power? So pag may inflation, can you just pass it down to the customers without losing market share? Or is your company that more competitive na pag tinamaan ng inflation, wala kang way, regulated like Meralco or Manila Water, hindi mo mapapasa yan sa company, and therefore, it's really gonna affect your costs, right? So in that case, you want to be able to understand what are those key macroeconomic indicators. Kasi guys, marami. Sobrang dami niya. You will have to choose. Kailangan ko ano yung relevant. Remember, one unspoken rule that I haven't told you but now will tell you is that anything you put in the research paper should really advance your story. Diba? As an equity research paper, diba? A lot of it is, well, a lot of it is actually analytical, almost scientific in terms of the process or methodical. But you know, there's a bit of an art there. Your storytelling, and I think this is one of the reasons why a lot of our winners are really good storytellers. They choose indicators that really connects to the entire picture that they're going to paint. Don't include here foreign exchange if you don't really have any exposure to foreign exchange. Like for example, you're in a completely local company with only local debt, di ba? So, kung wala ka namang ano, then might as well, how does that affect your company? It doesn't progress your story. So there are so many, you have to choose. It has to advance your recommendation. Okay? There. So an additional 11,900 megawatts is needed by Luzon, all right, to meet this. Okay. So there. All right. Now, okay. Next is the investment valuation method and the target price. So with this one, there are a lot of methods that we have. So, and of course, medyo, that's a separate seminar. That's a separate webinar. But the investment valuation or the method that you use and the target price. So here, you have to discuss first yung method nyo. Like for example, okay, we use discounted cash flow method. The discounted cash flow method discounts all the cash flows of the company, blah, 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 from the free cash flow, blah, blah, blah. So, and free cash flow is computed this way. You have to discuss that as a bit of a primer. All right. So, kailangan meron siya. Even though, well, at the end of the day, you might never know kasi kung what the level of technical expertise to nagbabasa, but just discuss it a bit. But note that there are a lot of methods: discounted cash flow, residual income method, sum of parts, dividend discount, direct capitalization. So there are a lot of methods that you may choose, but by the way, guys, it's actually dividend discount and discounted cash flows most popular, but they have specific weakness. So for example, for discounted cash flow and FCFF and FCFE, very sensitive yan sa assumptions. So you also will have to explain your assumptions, risk-free rate, for example, and the risk-free rate is kaya siguro kung meron kayo nung key yields or interest rate dun sa macro, siguro pwede nyo siya i-discuss kung discounted cash flow. And you could say that, okay, so we chose this because, ano yung reason? So for example, FCFF versus FCFE, pag highly leveraged, di ba, you choose one or the other. Residual income for companies that that doesn't have a lot of investment in fixed assets. Sum of parts, if you believe that the sum of parts is greater than, or the whole is greater than the part, most applicable for holding companies, diba? Binavalue mo isa-isa yung parts niya, and then together they create synergy. This is the value per share. Dividend discount only if the company is a persistent dividend payer and the dividend grows with the earnings. So may reason yan. Direct capitalization, maybe you're valuing REITs where it's mostly income and then medyo diretso yung income, right? Yan, baka pwedeng direct capitalization method. So you just have to explain why you chose that and then the reason why, of course. Now, along with that as well, you need to explain the risks and also the assumptions. Now, the risks of the investments will ultimately affect the valuation method. So, for example, most common dito sa banks, sa insurance, and even sa Meralco is that, well, these are highly regulated companies, right? Or industries. So, any change in legal or regulatory precedents or mandates will definitely affect your earnings, right? But also the assumptions. Later, we will include the detailed assumptions, but the assumptions here are very important because you want to be able to give the ability to your readers to judge whether or not your assumptions are conservative or aggressive, and they can adjust at least at some level according to their expectation if they're that kind of the readers, diba? You give them power to interpret, okay, this is my view, of course, and of course, founded naman yan. Everything you've been doing so far hanggang dun sa macroeconomics, kaya ito yung risk-free rate ko, kaya ito yung equity risk premium ko, etc. This is my beta. So all of that, you give them more, more power to interpret it or suit it according to their need, but of course also for them to understand where you're coming from, di ba? Kaya pala mataas kasi ito or kaya pala mababa kasi very conservative si research writer. Diba? So very important. I don't know, the equity research paper is actually quite a lot, but you know what? If you've done it correctly, it has the potential to really change the course of a company's way of investing. Especially, for example, if you have displayed an assumption that gets them thinking, di ba? Na, oh nga, no, di ko naisip yun. So see, it's not a futile exercise. It's a very, very, very important exercise that keeps the financial sector healthy. And of course, the appendices. So with the appendices, general rule, you know, guys, medyo patapos na tayo. General rule in my research paper is you don't include a financial or an appendix or any portion of the appendices that you did not use or reference in the main paper. But an equity research paper usually has, let's say, a particular template. So sundan nyo lang. Ito yung mga common na lumalabas. Financial statements. So this would include, of course, yung forecast nyo. So with the forecast, lalagyan nyo lang siya na F. So papakita ko sa inyo later. Of course, the common size financial statements, diba? So vertical and then may horizontal. May key financial ratios that you've used. Okay, so ROE, ROI, return of invested capital. So any common yan, leverage ratios, liquidity ratio, profitability. Very common. So again, different exercise. Shareholder and corporate structure. So here with the appendices, you can be much more detailed. Okay. Detailed assumptions and many more. So for example, you found a news that sinabi ng investor relation, okay, we are allocating 70 billion capex. Okay nun, right? Wala naman yun sa mga reports pa so far. Pwede nyo ilagay dito. So yung mga ganun. Or you found an industry report diba, that says na ganito pero wala rin sa iba pang mga discuss nyo, you can put it here, the news articles, the clippings. Okay? And because we're discussing the basics, of course, ideally, okay, the best if you are holding the stock that you're recommending or writing a research on, of course, this is also an encouragement for you guys to be a CFA charter holder. But of course, you have to disclose it na, okay, kahit isa lang yung share mo na yan. Okay? Kasi you don't want to to have an appearance na, kaya pala yun recommend as buy kasi meron siyang holding, diba? So, and then ayaw mo malaman nila yan. You are the one who will be disclosing it. And of course, you leave the ability or the final decision to the readers if they believe that you're unbiased. But ideally, you should, right? The best practice, however, is dapat you shouldn't be recommending stocks that you own, diba? That's for me the best practice. But if hindi talaga siya maiwasan, lalo na onti lang ng stocks natin and you happen to own everything, then that's the case, then you should just disclose it. And of course, there are other types of ethics like independence and objectivity. Okay, dapat, balik muna tayo dito. No, the reason for this one pala, and this is, don't discount this guys. Now, the reason why I'm telling you this is, you know, if you are doing stock, and I have a lot of students here, turo sila well, they're doing equity research. When you're doing your equity research, guys, di ba sobrang makikita mo na, ay, okay pala yung management nito. You've been reading the news. And then you will grow to love the company. Kasi, okay pala, humanitarian pala yung leader nito. I subscribe to this company. So, minsan, hindi mo may iwasan yun, right? Kasi, you've been researching, you've been diligently digging up, and then you fall in love with the stock. That's common. So, this is more common than you think. Kaya kailangan, just disclose it. But of course, because of that, may own ka na, just be independent and objective. And of course, you must be diligent and have reasonable basis. Okay? So with that, take advantage of the shift. Just read up and then guys, follow me. And if you have all of these accounts, like if you have Medium and I'm also an analytics writer, data science, and also in LinkedIn. That's where you can connect with me. So that's all. Thank you. I'm opening the floor for some questions.
Thank you so much, Frank. Really great insights and really true to life as it is in the industry. For the Q&A portion, maybe please call on Charlton Sean Gaerlan, the second CFA Equities Trader at BPI Investment Management. Thank you so much, Charles, and I'll pass now the virtual floor to you.
All right. Thanks, Sevi. Yeah. I have a couple of questions here, but if you guys have your own, you can just feel free to drop them in the chat here in Zoom, right? So I guess just to start, Frank, with research reports, there are like two factors that you have to consider. You have the comprehensiveness of the report, as well as the timeliness of the report. And sometimes these two factors tend to be at odds with each other. So maybe you can share some tips on how to find the right balance.
Oh, actually, very relevant question. Di ba kanina kaya tayo may evaluation date. Guys, by the way, that's very important. You don't want to provide a research report sobrang meticulous na parang it's no longer relevant. Ang dami ng bagong news, di ba? Now, generally in my case, well, okay. So, if you find the stories in the ratios early on, the ratios by itself is actually a really good guide na. And then that's where you should parang look into or rather follow the stories of the ratio. So follow yung profitability, and then the leverage, and then liquidity. And then after that, if you've siguro passed most of the disclosure, ito yung maganda ring sabihin ko sa inyo guys, most listed companies, they have fiduciary duty to report very significant things that that would either detriment or benefit their shareholders. But that disclosure is very important. So go through the company website and disclosures, and then after that, siguro, you can definitely write your research and that should be substantial enough. Kasi anything na hindi nahuli doon, that's not your fault. It's their disclosure. So,
all right, thank you. And then also, while we're on the subject of like news and like developments, there are also like, of course, there are times when during the stock naman isn't like static, right? It tends to move up and down the stock prices. And what if, for example, it already like reaches the target or it overshoots or undershoots depending on like how well the markets are going? Like how do you like assess whether or not to revise your target price or just stick with it?
okay. So with, for example, if you've used the discounted cash flow method, very, very prone to, you can try this, guys. We have a lot of good resource here. Baguhin nyo lang ng onti yung risk-free rate. Magbabago na yung valuation. With this one, we recommend generally to have leeway. I don't know kung paano siya ilalagay sa research report, but for example, sa amin, this is the target price. Given our assumption, that's okay. Pero what pwede mong baguhan or lagyan ng leeway is whether to buy. So for example, okay, the price now is 100, but ang target price namin is 102. Hold muna yan. Hindi porket may mataas na isa, buy na kagad. You give, let's say, a range. So if, for example, lumagpas ng 10%, yung upside, tsaka lang buy. So pag 110 siya, then sure tayo na hindi siya out of my assumption. May leeway tayo na pwedeng bumaba, pwedeng tumaas. So put in a range. Then sell, for example, pag bumaba siya ng downside ng more than 10%, tsaka lang sell. Pero kapag hindi pa, for example, 100 yung price ngayon, pero na-value yun 99, 98, hindi muna. So hold pa lang yan. So establish range, okay? And this will have to be another type of research that is mostly applicable to particular stock. So for example, pag bank stock, baka 5% lang, sell na. Pero pagka, let's say, penny stock, baka siguro 20%, okay pa. So depende sa volatility ng stocks.
All right, thanks for that. We have a question here in the chat. Can we get data from different sites, or do you have any like recommended sites to look for data when searching for or doing a report?
Okay, so thank you. Very relevant. No, one of the reasons why your role will be very important is that you will be the one to look for those type of information sa different websites. But of course, ma-recommend natin dyan company disclosure. At the end of the day, if you find different types of resource, or even, guys, don't reference mga thread, don't do that. So anything na reported ng company, that's still better kasi na-vet nila yan, right? And na-approve yan, may corporate communication yan. Of course, if they are found out na nagsinungaling sila, ma-delist din sila or something like that. So meron tayong level of protection from their own disclosures. So with that, PSE Edge, and even the company website. Those are the two that we trust. Of course, you have to find your own. But if you're subscribed to, let's say, data providers such as Bloomberg, meron dito, di ba? And then FactSet or Refinitiv, then that you can also use that kasi they also use filings or filings. Mas madali lang. And I guess those are, kung we want to be safe, yun talagang trusted.
All right. So yeah, again, that's Edge and the company website, or like for third party, it's Bloomberg, FactSet, like the tools and resources that we can also use.
Yeah.
Okay, so there's a...
Sorry, add ko lang pala. Also company news, sometimes Business World, kasi 'di ba, hindi ang filing regular Business World, yung mga trusted site, wag yung mga yung mga hindi, kasi may mga fake sites. So you have to do your research. Business World, Bloomberg, yung mga talagang reputable news information na may bagong update yan, you can din.
Okay, sige. Next question. Like in doing research reports, what do you think is like a common mistake that like a first-time research analyst makes, or is there something na parang sometimes like happens?
Okay. From my experience as a professor, but I will not. I'm not sure if it will be the same in companies. The first mistake na napapansin ko is that when you're doing your research, the lack of objectivity, it feels like you are a salesman of the company. It's more like research that highlights this is the best company ever. Parang ganon. But no, it should be like an objective na you are not, kasi nga, di ba? Sabi ko sa'yo, once you do the research, you get attached. It's not uncommon, believe me. So that's the first thing that it's not discussed, but it's not uncommon. Pag first time yung nag-research, nagbabasa ka, tapos sobrang ganda na. In your research report, meron ng lalabas dyan na words na parang you are selling the company as a good company. Guys, this is, kung meron akong tip sa inyo, this is a very important one. Not all good companies are good stock, and not all good stock are good companies. Magkaiba yon. So in the research report, most of the people will argue that buy this stock because this is a good company. That's not always the case. Separate the two. So I know that's a very deep advice, but if you will be parang armed with that knowledge as early as now, you'll understand why sometimes the good companies are not performing sa stock. You will see that, di ba? Hindi gumagalaw yung stock niya, pero sobrang ganda ng company. Yun. Okay.
All right, thank you for that. Okay, we move on to another question. Is there like a more efficient way to do a report na parang, is it better top down versus bottom up, or is it like just based on your field or?
Okay, this is something, I don't know if everybody will agree with me, but we have a research report, so most of the time it's really top down. But I do believe there are some things that are better bottom up. For example, if you're valuing, let's say, a startup, because it's operating in its own space to begin with, naman, di ba? So it's kind of useless to discuss, let's say, a lot of the fundamentals na, unless really needed. So but the key here, siguro kung rule, and you will establish this by reading a lot of research or research reports. Which format advances my point better? Kasi if I understand the importance of the macro only by understanding the micro first, then I should do the bottom-up approach.
All right. Okay. We also have a question, I guess, regarding valuations. What are the criteria in like choosing which type of valuation works best? And also, like, something like PE, is that also something that is still important? Like valuing based on PE ratios? Yeah.
Of course. I've seen a lot of research report that values using PE, and to be honest, guys, sometimes valuation using PE pa nga, provided me some returns, diba? But again, it's a different seminar, but there's a particular reason, and the CFA curriculum will give you that. So I invite you guys, just take it level 1 lang. It will tell you when a particular valuation method is appropriate. So for example, pag PE, price to earnings, dapat it's operating on the law of one price, meaning that this company is technically similar to this company. So siguro pag when you're valuing, for example, water companies, Manila Water versus Manila, for example, parang ganun. But of course, you will have to make a case that they're similar in almost everything, like even the leverage or capital structure, even the management, para mag-work siya, para high and low to, parang ganun. So there are specific reasons for using that, and I gave that. For example, residual income, maganda siya sa banks kasi wala siyang ganong fixed assets. Dividend, kapag dire-diretso yung dividend, you don't use dividend discount model kung nagbibigay lang siya ng dividends once in a while. It doesn't make sense, right? So something like that. So yeah, it's a nice topic on its own. The CFA has done a lot of good job actually parang iterating it.
All right, thank you so much. Unfortunately, we don't have more time for more of the questions, but I guess you can reach out to Frank directly. Maybe any last words you like before we wrap up this session?
So for you guys, a lot of here research reports are very important kasi you will inform buyers of the fundamentals of the company, and diba? Meron tayo dito financial it's your way of protecting the small investors who has no capability of invest or maybe investing a lot of their money. Diba? Masama yun na dapat yung money lang na pwedeng wala. But if they're investing significantly a part of their money, then you are doing them a favor by highlighting their risks and giving them information on what it is that they're truly investing. Not a lot of people are expert in finance, and if you can do this really well, you've done your part to make this world and this financial system a better place. So thank you so much. I hope you've learned a lot.
Right. Thank you. And Sevi.
Thank you so much, Frank and Chase. Definitely a fruitful discussion, and we sincerely appreciate your time and effort to be here with us today. We're seeing thank you messages on the chat right now, real time. So our sincerest gratitude again. Let's just have a quick photo up for the gram to document. So I think Mac will take the photo. Mac, pa-countdown na lang. Thank you.
Okay, let's take photo in 3, 2, 1. One more. 3, 2, 1. Okay, we're all good, sir.
Thank you so much again, and thank you to Frank and Chase. So for our attendees, we're going to have a 10-minute break now. And if just some reminders, if you haven't downloaded or installed the CFA Society Philippines app on your mobile device, please do so now. There is a prepared list of frequently asked questions available on the app. And if you want to post about the Philippine Junior Finance and Investment Summit 2021 on your social media feeds, please do use our official hashtags, hashtag PJFIS 2021, hashtag the future starts now, and hashtag CFA Society Philippines. And as a reminder, the evaluation form is available on the mobile app of CFA Society Philippines at the end of the day, and you need to attend 13 sessions. For you guys to get the e-certificate. Before I forget though, please allow me to just read out the certificate of recognition for Frank and Chase. So they'll be flashing it on the screen. We'd like to thank them again for their time and effort to be with us today. This certificate reads, so CFA Society Philippines presents the certificate of recognition to Mr. Frank Viernes, CFA, for his valuable contribution as speaker, Mr. Chase Gaerlan, CFA, for his valuable contributions as moderator in the session on basics of a research report in the Philippine Junior Finance and Investment Summit 2021. The future starts now. So thank you again, and we'll have a 10-minute break. And we'll catch you guys again in a bit for the second session in this breakout. Thank you, and I'll catch you guys in a bit.
Why choose the CFA?
How's being a charter holder helped my career?
The confidence that it's given me in my own analytical ability.
Being a charter holder has broadened my perspective.
My understanding of the industry is much better than before.
You gain a broad understanding of a lot of different subjects.
And it's made me more confident in the work I do.
Instant credibility from my peers.
I can go to a different country. I will meet people who have the same qualification, who understand what I've done to achieve it.
It's a global program, so you can speak to someone who's a charter holder from India or from South Africa, and they understand you.
It feels good to know that it's quite valuable for employers in the industry.
My belief that I can achieve anything.
So I think being a CFA charter holder helps me to communicate with my clients in a language they understand.
The CFA gave me a lot of information that I had not learned during my economics degree.
The amount of knowledge which you get is so diverse.
Something I didn't know when I started the program.
The Asia Pacific Research Exchange, or ARX, an online research platform focused on investment management. Covering 18 major markets in the region, ARX provides content on over 20 investment subjects, including within the fields of knowledge application, academics and regulation. Leveraging the extensive membership network and industry resources of CFA Institute, ARX is a sharing platform, feeding its users a great deal of first-hand industry news. ARX is also a learning platform, as a large number of high-quality research papers enable its users to stay abreast of all popular investment topics in the region. Beyond all that, ARX users can hear each other and find industry peers by publishing articles and research reports, making it a highly interactive platform. For more details, please visit www.arx.cfa. ARX is your preferred financial research platform for sharing, learning, and interacting.
Welcome back, everyone. How's everyone? Could I get an emoji react on how's everyone feeling so far? The session on the basics of research report writing was definitely helpful. Frank is one of the best in the industry, and he's a good friend as well. And I'm sure you learned a lot from him earlier. So we'll continue to part two or the last session of today's breakout. And then we can go after the PGFIS day 2. We can go prepare for Taylor's Swift's launch of Red Taylor's version tomorrow. I'm just joking. I think I outed myself as a Swiftie. Anyway, financial modeling is one of the key tasks of a research analyst, and it can be a daunting and time-consuming task. And it's important to ask really, what are the significant details that can make or break this process of coming up with a firm value to get to a target price? What are the steps we need to take? What are the details we need to pay attention to? So to better equip you in your journey toward your dream role, Mr. Ian Schnoor, CFA AFM, will be sharing best practices in working with financial models in this session. He is the Executive Director of the Financial Modeling Institute, FMI. In this role, he works closely with the team in the creation and execution of FMI's strategy. Over the last years, Ian has taught thousands of business professionals and university students in Canada, the United States, the United Kingdom, Australia, and Mexico. He is passionate about teaching and brings hands-on interactive approach to every course. Prior to the education role, he spent a number of years in investment banking departments of Citigroup and BMO Capital Markets. So let's give a virtual round of applause for Mr. Ian Schnoor, CFA AFM.
Hi, everyone. I want to welcome all of you to the Philippines Junior Finance and Investment Summit 2021. I want to thank the CFA Society of Philippines for having me in today to lead this session for you and for all the great work that they're doing to support junior finance professionals in the country. I'm Ian Schnoor. I'm really excited to be here to lead this webinar for you today on financial modeling best practices. We're going to jump right in, and I'm looking forward to spending the next 40 minutes sharing with you some of my top 10 favorite tips on what it means to build a world-class financial model. So let me go ahead and share my screen here so you can see my slides. I've got a few things. Here's what I want to do. I want to start with a very quick introduction. Again, my name is Ian Schnoor. I want to start with a quick introduction of who I am and what I'll be doing for the next 40 minutes. And then we'll dive right in and we'll get right into the topic. Now, I've got to warn you, this webinar is often 90 minutes long. So I thought about speaking twice as fast to get it all in, but I realized that's probably not a great idea. So I'm not going to go through all of the depth and detail that I normally do, but I still want to share with you some ideas around financial modeling so that you understand this discipline and understand this profession and what this actually means. During this webinar, I will be sharing with you some slides here that you can see on my screen. I will be showing you a financial model in Excel, and I'll be keeping some notes. All of these files will be available to you once the conference is over. So let's start with this. I'm going to jump in and talk just for a moment about who I am. So as I said, my name is Ian Schnoor, and I'm actually based in Toronto, Canada. It's a sunny day here today in Toronto. I'm looking out the window. It's around 10 degrees Celsius. So nice and warm. Just kidding. Not too warm by your standards, I'm sure. But a nice day here, and excited to be here and sharing this webinar with you, literally from all over the world. So I started my career in banking, in investment banking, around over 20 years ago. I worked at a bank called BMO. I worked also at a bank called Solomon Smith Barney, which is part of Citibank. And then around 20 years ago, I started a training business in the world of financial modeling. It's called the Marquee Group. Through the Marquee Group, we offer training programs in financial modeling and valuation all over the world. And that's something that I've enjoyed. I've led sessions on financial modeling to thousands and thousands of people, and it's been a really enjoyable experience to do that. We have a large team now that runs all sorts of coordinated programs. But around 5 or 6 years ago, I was involved in setting up and founding this organization here called the Financial Modeling Institute. And you can see it on the cover of our slides. The Financial Modeling Institute was set up to be an accreditation body in the field of financial modeling. Think of us more like the CFA Institute. Our mandate is to offer rigorous, challenging exams in the field of financial modeling to ensure that people have really exceptional skills. And I'll talk about why that is in a moment. But as you'll hear me say, financial modeling has become one of the most important skills needed today in the world of finance by junior finance professionals. So that's what we do at the FMI, and I'll show you just very quickly here for a second. You can see this is our badge for the first level. It's a 3 accreditation program. We have 3 levels. Each level provides its own designation. The first one is called the AFM level. And you can see here, this slide, page 5, which you'll see shows the badges for each of the 3 levels of our program. In a nutshell, the very first level, the AFM level, requires you to build up a fully integrated, world-class, best-in-class financial model of a company from scratch in under 4 hours. The exams used to be in person, you can see here, but now we've moved them to virtual, still proctored, still controlled, but they're done virtually because of COVID. But I think we're going to stay that way because we've had people from all over the world writing the exams and finding it really helpful to do it virtually. So you can check out our website and see a little bit what we're doing and what we're up to. We'd love to hear from you. There are also a bunch of slides as I go to the back here. When you get the slide deck, you will see a bunch of slides here towards the back that talks about the FMI, provides an overview of who we are, what we do, our mission, our values, and why it is so important. Part of why we're here today is because the CFA Institute globally, the CFA Institute has become a very big supporter of what we do, and a big, they've told us that the #1 request of CFA candidates is to please offer financial modeling in the CFA program. The reality is that most CFA charter holders and candidates at some point are going to need financial modeling skills in their toolkit. And so the CFA Institute has no plans and no intention on incorporating financial modeling. So they really like knowing that, that we're here so that they can encourage CFA candidates and charter holders who are interested in financial modeling to go ahead and try to pursue an accreditation through the FMI. So that's our strong connection. The CFA Society in Philippines, the CFA Society Philippines, has brought us in to run webinars. And today I'm going to quickly go through the first topic here, financial modeling best practices, 10 tips to build a world-class model. If you like today's webinar, you might be able to check out the longer version through the CFA Society, but we have a number of other topics that we are currently leading all over the world on how to check and review a financial model, how to run scenarios and sensitivities, and you can see all these here. So let's dive in the interest of time. I want to share with you some of my favorite tips on financial modeling, and I'll turn in the slides to page number 9. And I want to start by making sure you realize that financial modeling is its own discipline. It's not so much a skill. It's more than just a skill. It's a discipline, and it requires a lot of different skills. And the skills that you need to be a good modeler are listed on page 10. I'm actually going to jump over to an Excel file and take some notes because I always like to ask this, and you can see here my notes file. I always like to ask, what is a financial model? And I'll answer that question in just a second. By the way, when you receive this Excel file, you will see my name at the very top here. You've got my email address if you want to reach out or if you have any questions. We also have, if you're interested in taking a screenshot, if you enter in this shortcut, this link, if you enter in this bit.ly link, you will be able to download this shortcut file that's got some of our all-time favorite keyboard shortcut sheets. And it's right here, this helpful Excel keyboard shortcut sheet, some of our favorite shortcuts to really work quickly in Excel. And you can get those if you go to the link that I have put on my screen. I'll show you that link one more time, and you'll also see that link when you receive the Excel file here. We want to make that available to you. What is a financial model? Let me start by asking that. Well, it's simply a forecast. It is simply a forecast. All we're trying to do is we are usually forecasting a company's financial statements. That's all we're trying to do. We're trying to forecast a company's income statement, cash flow statement, and balance sheet. And the discipline of modeling is all about how do you build a beautiful spreadsheet in Excel that allows you to properly forecast a company's financial statements. Now, how far in the future do we forecast? I would say people typically forecast 5 to 10 years. That's most common. But my bigger question is why? Why do we forecast? And I will tell you, it's because models have become the most important, I'll spell that correctly, the most important decision-making tools in finance, full stop. Full stop. Financial models built in Excel have become the most important decision-making tools in all of finance. People use their financial models to make a wide range of critical financial decisions. So what types of decisions are people making with their financial models? Well, they're making decisions about valuation. How much is a company worth, for instance? People are making decisions about go or no-go decisions. I'll call it go, no-go decisions. Should a company invest in a new project, in a growth opportunity? I'm going to go to point one and call it a valuation/investment decision, right? So if you get involved in the world of investments or valuation, you will be looking at or building models to help make those decisions. If you work at a company, you use models to help make a decision on should we invest in a new project, a new opportunity. There are lots of other reasons why people build models. People build models to evaluate credit or debt opportunities, or even we'll say leverage buyout, LBO opportunities. Can a company support having more debt on their balance sheet? We'll use models to help decide that. How about people use models to evaluate risk and volatility? People use models to understand the volatility inherent in a business. People use models, let me close up. People will use models to evaluate mergers and acquisitions. Should one company buy another company? And the list goes on and on. What I'm getting at is that financial models built in spreadsheets have become the most important tools used in finance because we use them to make so many critical tools. But there is a problem. The problem is that most financial models that people ever build are a mess. And here's where you have an opportunity. As a junior finance professional, you have an opportunity to develop world-class, best-in-class financial modeling skills. And if you do, I promise you, they will stay with you for your whole career, your whole life, and they will enhance your ability to work with teams, to lead teams eventually, and to be able to make optimal financial decisions. And again, all we're doing is building a forecast. We're taking the historical data and forecasting it into the future. But that's what we do to make all sorts of decisions. So most models are a mess. They're hard to read. They're hard to understand. Have any of you ever opened up an Excel spreadsheet and looked at a formula? And have you ever seen a formula in a spreadsheet that was so long that it wrapped around and around and around? Have you ever seen a huge long formula in Excel? That's not optimal. We can't do that. We shouldn't do that. It makes it very difficult to read, to follow, and to understand. So let's talk about what it means to build a strong model. And over the next half hour, I'm going to share with you my favorite top 10 tips to make sure that your models are beautiful, that they're working well. I guess at the end of the day, a good model, I'll put a note here, a good model needs to work in two different ways. So now you know that a model is just a forecast in Excel, and a good one has to work in two different ways. Number one, it needs to work electronically. That means that every formula must make sense. Every formula built in Excel must make sense. But number two, I will tell you, a good model must work on paper or as a PDF. But that's how senior decision makers will make decisions. Senior executives will make a decision by looking at something on paper or as a PDF. They rarely look into the Excel model itself. So we need to make sure that our model can communicate. Really, at the end of the day, a model needs to be a powerful communication tool. And when it's a powerful communication tool, it allows you to make optimal financial decisions. And if I jump back into our slides here, take a look. You can read these on your own, but it says on slide number, where am I here? Slide 11, that a good model has to be a powerful communication tool. And when it does, when it achieves these criteria, when it's dynamic and flexible, it creates a lot of confidence. you will be well regarded as someone who can understand a company and help make critical financial decisions. So how do we build models that are best in class, that are communicate clearly? Well, we need to go through the tips I'm going to share with you, and they're coming up here, but we need to keep things simple. We need to keep our design simple, our logic simple, the flow of the model simple, and make sure that all of our formulas are built in a very simple way. Now, one thing we should never do is this. I will show you this formula here. This ruins models faster than anything. We can't ever hard code cells. I'm not sure if, has anyone ever seen a formula that looks like this? Have you ever seen something that has a, let's say, equals A5 multiplied by a number, say 0.025 plus 4.9? I made that up. We can't ever do that. We can never build formulas that look like that because nobody will know what they mean, how to make changes, or how to understand what's happening. So let's go through here and jump in and talk about the 10 tips. They're on slide number here. They're in the slides. Well, there's no page number on this one, but I think it's around page 13, and it will show you the top 10 best practices in order to make sure that your models are going to be world-class so that you can make powerful decisions. Number 1 and 2, I'm going to cover together. It says, when you build a financial forecast of a company, your job is to be much more than someone who just works in Excel. You're not sitting in the corner all day long working on an Excel file. Your job is to get involved, to ask questions, to be engaged, and to ideally have a great dialogue with a lot of people working in part of the process. The model builder is the central person in every entire project. So if you're going to build an effective model, you need to start with a plan. And I'm going to put this down here on my notes file. Model planning is so critical. Model planning is so critical. Let me jot this down here. It is so critical to have a proper plan of your spreadsheet before you build it. We like to do it in 3 steps. And if you look at the next page here that I'm in, there are 3 steps that we like to follow in order to build a strong plan. Step number 1 says identify the major issues. Step number 2 says identify all the assumptions that need to go into the model. And step number 3 says identify what will all the schedules and the components be? And you can see on the next page a list of them, but what will be in the model? So let me give you a couple of notes to go into a little bit more detail. Step 1 is to identify key drivers. I said earlier that they are the major issues, or we often call them the key drivers. And what these are is these are the most important assumptions in the model. These are the most important assumptions in the model. And why are they the most important? They're hard to forecast and they're hard to control. And because of that, we need to run various cases. So we will need to run various cases. So these are going to be things like, economic variables, things like exchange rates or commodity prices that are hard to forecast. So when you're forecasting a company into the future, there will be certain variables that are hard to forecast. Often they're economic variables, and you want to be able to think about them. I will show you in just a few minutes how we build them up in our model. The second step I talked about in a good model is to make a list of all the assumptions. And this will often be a long list. This will often be a long list of all the inputs that you need to build the model, because you're going to need a list of variables like, how do we figure out the company's revenues? How do we forecast their costs, their assets, their debt, their equity, their income taxes, their working capital? You get the idea. I need to understand all the critical assumptions so that I can forecast all of these key elements. I'm going to show you the model in just a moment. We will get into it in just a second. The third part of a good plan is to plan what the model will look like on paper. Plan out what the model will look like on paper, what will be on every page. And I guess my point is as I said earlier, ask lots of questions. Your job is not just to be a receiver of information. A good modeler knows that their job is to ask and to push and to challenge people's thinking as to how the company will work, because then you'll be able to model it. But you want to make sure that all the assumptions and the model constructs are reasonable. So what are some of the common questions that we need to ask when we're modeling? I'm on the slides again. Things like, what's the purpose of this model? Why are we building it? Which assumptions do I need to make into scenarios? How much detail do I need in the model? Where am I going to get the historical detail? Go back here. How are we going to measure the results? What will be the metric used to measure the results? How many time periods do we need? What's the right order to present the model? And you get the idea. Make sure that you are vocal and you are active and you are challenging people. It really encourages great dialogue and will allow you to build a much better model. So that is the first critical part of building any good model, is to recognize that a model has to be planned and designed, and you need to ask really good questions. Before I get into the third one and the fourth one, I want to talk for a minute about model flow. And I want to tell you that model flow is so important. The optimal flow of a model is so important. This allows it to communicate clearly. Optimal flow will allow the model to communicate clearly, because as you just heard, we have to think of a model like as it's a presentation. So let's take a look at model flow. I'm going to show you a model right now. We take a look at my screen. I am showing you a model. You're going to receive this model. This is a model that we produce from the FMI. This is a sample model. By the way, this model built in Excel is a good example of what you need to build in the level 1 AFM exam through the FMI. On that exam, we give you a case study. We give you a blank Excel spreadsheet, and you need to build up a model like this from scratch. You've no resources, no internet. As I scroll down, take a look. I'm on the model sheet. There's a revenue forecast. There's a cost schedule that walks through the costs. There's an income statement. There's a cash flow statement. These are all the financial statements. You get the idea. My point is, on the exam, you need to build up a model like this from nothing, from scratch, in under 4 hours. Now, by the way, as part of the FMI, we also have a new tutorial series. We have a 12-hour, 60-video tutorial series that walks you through step by step how to build up a model just like this one for the exam. So you can see that if you're interested in ever doing the exam. But right now, I want to share with you tips and best practices. So this is a model. I'm showing you, and I'm jumping in and I'm showing you in Excel the different pieces. But before I show it to you in more detail in Excel, I want to show you what it looks like as a PDF. Yes, as a PDF. Take a look here. I have this model as a PDF file. You'll notice it's 15 pages long, 15. I want you to see what it means for a model to be a powerful presentation. So imagine we printed this on paper, or imagine I emailed this to you as a PDF. Here's what you would see. The very first thing you would see is a cover page. Do you see this? There's a cover sheet. It simply sets the tone. It sets the stage. Most models do not have a cover sheet, but it's really powerful and very important to include one, because it makes the model feel like a presentation. So you see, I've got a really simple cover page. It's got my company name. It's got the date on it, and it allows the reader to feel like this is a document. So I would start with that. The second thing you always want to include in a model is an executive summary. See this? It says summary outputs. There's an executive summary, and I've got a table for my summary values running the base case, but we also did a table for the best case, and we also have a summary table for the worst case. And I literally just have here things like the revenue, EBITDA, net income, and some margins. I'm going to make an important point here that you can note. The executive summary must be customized for your model, for your deal, for your situation. The executive summary must be customized. Let's talk about this model flow. What I would say is, number one, you definitely want a cover page. It sets the stage. But then in any model, you always want to have an executive summary. The executive summary provides the answer, and it needs to be customized. Why do we show the answer first? Because it's the first thing people want to know. Your client will want to know, what is the answer? What is the answer? So I'm showing it to them first. Now, as you're probably guessing, it's the last page you build. It's the last page you build, but the very first page people want to see. So it's the executive summary. And then the next thing in a model is to look at on page 3. You can see I've got page numbers, page 3 and page 4. I have, if you look at the top, my inputs, all of my inputs and assumptions. And it's critical for that to be next. Now, as I go through here, you can see, let me go back to the beginning, a cover sheet, an executive summary. Next after that is all of the model assumptions. And you can see as I get a little bit bigger, I have a box for product pricing. I have a box for operating costs, for depreciation, for interest rates. And on the next page, there's another page with assumptions on things like capital expenditures, on working capital. I guess I want to leave you with a couple quick notes on that in terms of model flow. We need to have the assumptions up front. We need to show all assumptions up front because why? Because as soon as your boss or client sees the answer, after the client sees the answer, they want to know, let me spell this. What they want to know always, every time is, how did you get there? How did you get there? What assumptions did you make? Let's take a look at it in the Excel file. I have a tab. Do you see this? There's a whole separate tab in the model just for the assumptions. And you can see them here. I can scroll down and all the various inputs and assumptions are listed right here. Very, very simple. Now you'll also notice there's a coloring issue. There's a very, very common model convention. And you'll notice this, there's a blue numbers. In models, a very common best practice, there's a best practice for colors in a model, and that is as follows. Any cells that are calculations are typically going to be black, whereas any cells that are inputs are going to be blue. And I'll make it blue right here for you. It's a very common modeling convention. And why do we do that? So it's clear, so it's obvious. So when you go in, look at a model, any cell that's blue, you know that that was a number that somebody typed in. Look, it's an input. It's not a calculation. It's a data input. By the way, it's very easy to build the assumption page. It's very easy, right? Very easy to build the assumptions page if you first planned your model. If you first made a strong plan, if you went through this process, if you thought about all the issues and key drivers and assumptions, it's very easy to build the assumption page. You collect all your data and you enter them in. So we've now talked about tip 3 and tip 4. I've said, keep the assumptions up front and make the data inputs blue. So it's very clear to a reader what you are doing. By the way, when I showed you that the model needs to work well on paper, let's just continue for a second. So here is the assumption page. Look what happens next. On page 5, I'm going to get here in a moment. There's the next page is a page on scenarios. And this is the next page you always want to include in a model. And I'm actually going to note that right now, that the next thing you always want to include in any good financial model is a scenarios page. And I'm going to put that in here. Look, I'm talking about the optimal model flow. Let me write the word optimal. Optimal model flow means you want a cover page. And then I said an executive summary is really important to show the reader the answer. And then I mentioned that it's really important to have all the assumptions. But the next thing you always want to build in any model is a scenarios page. And what this is the most important assumptions. This is the most important assumptions. So we have multiple cases. Look at this. We have multiple cases for the scenarios. When I show you the scenarios again, look what's happening here. As I go to the scenarios page, look what we have. I have, for instance, cost inflation, but for cost inflation, I don't just have one value. I have three values. I have a base case, a best case, and a worst case. Same thing for selling prices. I have a base case, a best case, and a worst case. And finally, for volumes, I've got a base, a best, and a worst case. And why is that? Well, these are assumptions that I told you I'm building with three options. And the reason I'm choosing to build these assumptions with three options is because these are the key drivers. These are the most important assumptions that I mentioned earlier. So these assumptions are the key drivers. These are the most important assumptions that we need in order to play with the model. And so we want to build them in a very, very important, powerful way. Every model you ever build should have a scenarios page. I will say every model should have a page like this, because every model, every forecast will have some variables, some assumptions that are hard to forecast, hard to control, like exchange rates or inflation rates or interest rates or commodity prices. And you want to run more than one case. So what I want to do is let me show you a couple of excellent tools, and then I'm going to get in. So where I am now is on tip number 5. Tip 5 says build a scenario page in your model. Let me do that. And then I'm very quickly going to go through the last 5. I'll do those very, very quickly. But I want to start by showing you what it means to build a scenario page. By the way, you might want to watch this part of the video a couple times. I'm going to very quickly go through a couple of technical tools. By the way, in my presentation slides, if you take a look at the presentation slides here, there are a number of pages that we have included on modeling skills, some technical skills that you need in modeling, so you can see them here. I'm going to review a few of them, 2 of them right now, actually. I'm going to go through this slide. I'm going to show you this slide on creating scenarios. Do you see the title here? It says creating scenarios. I'm going to show that to you. I'm going to show you a really powerful feature in Excel called the choose function. And then I'm going to show you how to build a switch. Okay. So come back to the slides, come back to the video, and you'll be able to figure out how to build this because it's such an important page. I guess what I want to tell you about any scenario page is that there are 3 steps. And step 1 is to build. Do you notice that there's always a large rectangle? Look at this. I have a large rectangle that has 3 rows. Well, these are the actual assumptions, the inputs, and they are blue. You notice that? My data inputs are blue. They are the inputs and assumptions, and I've got 3 cases. I have a base, a best, and a worst. How did you get this? Because as the model builder, you went to your client or your boss and you said, what do we think the inflation will be under the base case? What do we think the worst case is, the best case is for inflation? You ask people and you come up with some values. Now you see they're blue, they're inputs, very, very simple. Well, the next thing we need to do is we need to have a switch. And you can see here, I have a blue number 1 in a cell, and it's very simply a switch that walks through which case we're running. So right now the switch says 1, and because there's a 1 in this cell, you'll notice here that I have 1 more row, and this is my live case. This is the case running in the model. This is the case I'll put here, running in the model. And you'll notice it's black. These numbers are black. That's because they're calculations. They're not inputs. When I put a number 1 in my switch, the live case pulls up the base. The base case values are going up into the live case. But watch, if I put a number 2 here, now the live case is lifting up, pulling up the best. The best case values are moving up into the skinny row, and they will be driving the model. And finally, if I put a 3 in the switch, the live case is lifting up the worst case values, and the worst case is now going into the live row, which means it's running the model. So the question is, how do you build a formula in the live case in the skinny row? A lot of people use Excel's if statement, but it's not optimal. A lot of people use an if statement to build this row. You can try to use it. It gets long. It gets very, very hard to understand. What I want to share with you instead is one of the most powerful features, one of the simplest features in Excel. You'll see this when you get the model. It's very simply Excel's choose function. And look how simple it is. You type equals choose. Then you tell it, where's the switch? In this case, the switch is D6. Do you see that? My switch is in cell D6. And all it wants to know then after that is it wants to know where are the choices. So if my switch is D6, now I have to tell it where are the 3 options. Well, you can see here, G14 is the base case option, G15 is the best, and G16 is the worst. The order depends on the order that you type them into the formula. So if your switch has a 1 in it, the choose function will pull out the next item, G14. But if your switch has a 2, it will pull out the second item. And if there's a 3 in the switch, it will pull the third. The order is the order that you type them into the formula. So once again, if I put a 2 in here, now the choose function is lifting up the middle, the second option, the second one within the list. Please use it. It's a great tool. I hope you find it helpful. It's really simple, but very powerful and very effective. Now, the last thing I want to show you on this page is a drop-down box here. I don't like leaving this number 1 exposed. I don't like having a number 1 there. I don't want my client or my boss to see the number 1 because it doesn't mean anything. It's not clear. It's not obvious. I'd like to cover it with a drop down. But what is this? Where is it? Well, there's a slide in your book, but let me show you very quickly how to build your own drop down boxes that can control the model. What you need to do first, do you guys see on my screen? You need the developer tab. And you might not have that in your Excel. You need the developer tab. So let's start. I'm going to show you how to activate the developer tab. You go to your file menu and then you go to options. Look where I am, file. And then I go file options. And when I'm in file options, I go to customize the ribbon. Okay, you can watch this on later again if you like, customize ribbon. And then on the right-hand side, there's an option for developer. I need to turn it on. Yours might be off. So if it's off, please turn it on. And when it's on, you will always have a new menu here called developer. When you go into developer, you click developer, go in, and then you go to the insert button. And the one you want is on the form controls. It's the second one. Look where my cursor is. It's the combo box, the second one from the top. On the top left side here, the second button says combo box, and I clicked on it. And when you click on it, you get a little plus sign. I can hold my mouse button down and just draw one. I literally just drew a drop down. Again, I went to developer, I clicked insert, and then I clicked on the second button, which is my combo box. And then I drew this. All you have to do now is go to format the control. And from format control, let me show you one more time. You again, just do it. I'll just do it a little more slowly. You go to your drop down and you right click with the right mouse button. You right click and go down to format control. And it wants to know 2 things. It wants to know where's the input range and where's the cell link. Well, the input range means where's the list of words? Where's the list of words? Look what I did. I selected all the words, base, best, and worst. And then the next thing it wants to know is cell link. And the cell link means where is the switch. So I clicked on that. That is the switch. The input range again means where's the words, and the cell link is where's your switch, just like that. And when you click OK, I'll delete it now, but when you click OK, you get a drop down that looks like this. If I click base, it runs the base case. If I click best, it runs my best case. And if I click worst, it runs the worst case. Guys, clients love this. Senior people love it because it's so user-friendly, so simple. What does it do though? All it does is it enters a digit. It enters a number into the switch cell. So when you click the first option, it puts a 1 in the switch. When you click the second option, it puts a 2 in the switch. And when you click a third option, it puts a 3. That's it. Finally, what I'm going to do is activate it and slide it on top. Because now when you open it up and you click base case, it put a number 1 behind it in the cell, and the choose function will now run the base case. It is very important and very powerful to have scenarios in every single forecast model you ever build. All you ever need to do is build it exactly the way I showed you. Step 1, set up your actual data inputs. Step 2, have a switch in a cell. You can see I have a number 1. Once you've done that, you can build a choose function. And finally, you will cover it up with a drop-down box to run it. And it's a very powerful part of any model. So I really hope you can leave and start to build this in your own models and your own Excel files. I know we're almost at time. I want to finish up very quickly. The last 5 I can do very, very quickly. And I want to go through them here. Let me start with number 6. So I've talked about the first 5 tips are more about the front end of the model. Let's now review the last 5. And you might want to think about these. They're very, very important. I will cover them off in just a couple minutes here. Point number 6 says it's optimal to build your financial statements vertically. That's not always intuitive, but take a look, guys. When you see I have a sheet called model. And when I scroll down the model sheet, you'll see I have an income statement. And underneath it, I have a cash flow statement. And underneath it, I have a balance sheet. I have aligned them and built them vertically. A lot of people build each financial statement on a separate sheet. So they might have an income statement tab, and then they might have the cash flow statement on the next tab, and then the balance sheet. And that's okay. There's nothing wrong with that. It's not terrible, but it's not optimal. People make lots of mistakes when they put things on different tabs. Why? It's because all the financial statements talk to each other. So look at this. I've got an income statement. You know the income statement always starts with revenue, and an income statement ends with net income. You see that? My income statement ends with net income. Well, as I go down to the cash flow statement, every cash flow statement begins with net income. So look how easy it is to build and link it. I just link it up to the bottom of the income statement. It's so simple. When you stay aligned vertically, it's so easy to build. Everything is like a waterfall that flows down the page. Look, all these cells are just links. My depreciation, I'm simply adding back from the income statement, but it's right above me. It's very, very simple. So I really encourage you to keep your financial statements oriented vertically. It makes it much easier to build, and you will minimize errors when you do that. Now, the last couple here before we end, say 7 and 8 say, do not do any work on your financial statements. Do your work on schedules. So important. Watch this. I'll go back to the model. I'll go back to my income statement. You all know that an income statement starts with revenue. And then the next thing on an income statement is operating costs. And then you get down to EBITDA. But look at this. My revenue line on the income statement does not have any big formula in it. It's just a link. What about my cost of goods sold on the income statement? It's just a link. So my point was, do not build any big formulas on your financial statements. Let me keep going down. Depreciation is not a big formula. My interest is not a big formula. Look, it's just a link. Same with income tax, just a link. So where are all these cells coming from? They're coming from schedules, and you can read those schedules on your own. The revenue one is coming from K26. Let's go up there on the same sheet. What you'll notice is it's coming from my revenue schedule. So a good model builder, good model design means you build a schedule and then you get the total from that schedule and link it into your financial statements. So you build a revenue schedule here, you get down to total revenue and then link that into your income statement. Same thing with operating costs. Build a cost schedule, derive your way down to the total costs. This is the total cost on the cost schedule. And then on the income statement, look at this, it's just a link. So what we like to say is we like to say build it and then link it. By the way, in terms of in the model flow, I'm going to say here scenarios and then finish up with, and then the next thing is the schedules and financial statements. And the note that I want to share with you is build it, then link it. And what that means is, one more time, build a schedule, then link it to the financial statements. Do not have any giant formulas right on your financial statements. The work should be built on schedules. And as you roll down, you will see underneath the balance sheet are just more schedules, a depreciation schedule that calculates the company's depreciation expense, an income tax schedule, a working capital schedule. We need a full course to go through all of these, but today I want to talk about discipline. The discipline is you build a schedule and then you take the total from the schedule and you link it into your financial statements. I'm almost done. The last two are just this. The last two say build very simple formulas. And the way you build simple formulas is you repeat all your data. So let's go back to the top. On my revenue schedule, it's very simple. When you look at the schedule on your own, guys, take a look. I have a link. So I have a section on pricing. What's the sales price going to be? All I did is I repeated an assumption. And then I repeated another assumption. And then I built a simple formula. Look how simple this formula is, because everything I need is right here. My net selling price is just the gross minus the freight, but it's very simple. What I want you to think about when you get the model is that every single formula in this entire model is a tiny little calculation. Look, no giant formulas. My revenue here is just price times volume. Look how simple. Price times volume. By the way, why am I dividing by 1,000? I'm just converting from thousands into millions. This is okay. This is really the only time people are comfortable typing a number in, because I'm just moving my decimal to display these in millions. Everyone will understand what that means. I've got a label here saying that. But my major point is, do not build your work here on the financial statements. Build schedules. And that's the trick to building a powerful model. Build schedules. The schedules should repeat all your assumptions. Look, I'm repeating my various assumptions. I'm repeating, and then I can build really simple formulas, and then it's clear. So guys, I did that quickly. Apologize if I'm a few minutes over here, but what I wanted you to see is this. To wrap up, and you're going to get these files. To wrap up, guys, financial modeling has become the most important technical skill, one of the all-time most important skills people need in the world of finance. All it is we're building a forecast so that we can make optimal financial decisions. And you have an opportunity, because a lot of spreadsheet models are terrible. They're a disaster. If you can follow the 10 tips that I shared with you, you will be able to build a best-in-class model that's usable, that's clean, that's beautiful, that tells a story and allows people to make great decisions. And you're going to look like a phenomenal contributor, a phenomenal team member as a result. And you're going to get asked to do a lot of modeling and to be involved in a lot of decision making. So I hope that helps in that short discussion today. I hope you found that helpful. If you have any questions, we look forward to being in touch. I really hope you enjoy the rest of the conference. It's an excellent opportunity to improve your skills, and maybe we'll see you at a longer webinar or another webinar, or at some point, or perhaps even at the FMI if you really want to improve and validate your modeling skills. So thanks everyone for being here. Thank you again to the CFA Society for bringing us in. Have a great day and a great rest of your conference.
Thank you, Ian, for those insights. Super comprehensive and a helpful guide to first-time beginners in the financial modeling space. We'll have a quick Q&A session. So we'll have Mr. Stevenson Yu, CFA Assistant Professor at the University of the Philippines, Cebu School of Management. So let's all watch this video.
Okay, good morning, everyone. I'm Stevenson Yu. I'm a professor at the University of the Philippines, Cebu. I'll be your moderator for today. So, Ian, how would you get better at financial modeling? They say that practice makes perfect, but it can be hard to get experience without already having experience.
Yeah, it's an excellent question. Nice to meet you, Stevenson. Thank you for moderating this part of the discussion. Yes, it's hard to get experience without experience. That's true for everything in life. But in terms of modeling, there are lots and lots of ways to practice. And that's part of why we established the Financial Modeling Institute a few years ago. Because through the examination levels and the training materials that we provide, people can truly learn the skills of modeling and then get accredited for it and have a stamp of approval that they know what they're doing. And then there are also lots of training firms all over the world that provide training courses. So once you've taken some training, you can practice and practice until you really are comfortable. And the good news with modeling is once you're good at it, it stays with you for life. And so you'll really understand it. So there are lots of ways, I think, to really prove and get better.
Interesting. So speaking about the certification exams, how different or how hard are they compared to existing financial modeling competitions, such as the CFI modeling competition and the Financial Modeling World Cup?
Yeah, it's a great question. And, you know, competitions are great. There's a very different purpose. I love competitions. Competitions are a great way to challenge yourself. Competitions are fun. They're sort of like a game and a way to kind of have a good time. But that's not what we're doing at the FMI. I mean, and competitions might teach you some good skills and let you practice. But what we're doing at the FMI is very, very different than any competition. It's more like what we're trying to do is we're building an institute that's much more like the CFA Institute. We're building an accreditation body. When you do a competition, your work is not controlled. It's not proctored. You're working usually in a group, in a team. At the FMI, our exams they're online, but they are proctored, they are monitored, they are recorded. So there's no cheating. You need to show your ID to write the exam. It has to be approved. So what we're trying to do is make sure that people absolutely know how to build a financial model, have strong modeling skills, and then can get validated for that once they can prove it. So it's different than a competition. Those are great. They're great, but they serve a different skill. And in a competition, they're trying to anoint a winner. So they're often challenging and tricky because they're trying to find one winner. At the FMI, anyone who passes the bar can get their designation.
Okay. In your discussion, you were talking about, what are the tips, right, to build good financial models. But in the corporate world, usually we inherit financial models instead of having to make them from scratch, because you oftentimes don't have the luxury of being able to plan out, okay, these are the inputs that I need, right? Which is, I think, one of the tips that you have.
Yeah.
So how do you deal with situations where you have to use an inherited spreadsheet, and then it gets more and more complicated as the scope is expanded throughout the years?
It's an excellent question. It's an excellent question. And so I would say, I mean, I've worked with thousands and thousands of people in lots of groups over the years. You're absolutely right. I would say probably half the time when people are working in models, they are building models. People who work in banking groups, in investment banking and private equity, many of those people are involved in building models from scratch. And so they can put their own design into them. But lots of people, I agree with you 100%. Many people are inheriting models. And as I talked about in the presentation, many models that exist in the world already are terrible. They're a mess. So what do you do if you inherit a terrible model? Well, the funny thing is the answer is exactly the same thing as if you were going to build your own model. I have inherited numerous models of my own over the years that were terrible. But instead of just using it like that, what I tried to do is to renovate it, to fix it. And believe it or not, you can renovate and clean up and fix an existing model so that it's as nice as if you had built it on your own. Now, if you're only going to look at it once or twice, you're not going to bother doing that. But if you have to inherit a model and you have to own that model and you have to make it your model and you have to use it, then I encourage people to try to renovate it. What that means is plan out the assumptions just as if you were going to build it. Think about what the assumption page would look like and make sure all the critical inputs are on an assumption page. I mentioned in the session that in many models, assumptions are scattered. They're all over the model, which makes it hard to work with. So I tell people, take all the, if you have a terrible model that you inherited, put all the assumptions up front on the input page and then link them back later in. And I tell people that if they see huge, long formulas, to break them out into lots of little steps. Follow the approach of the model that we shared, that I demonstrated, and you can take a terrible model and, believe it or not, you can make it just as nice by renovating it as if you had built it on your own. It's possible.
Okay, so you would suggest actually renovating it as if it's a new model.
If you have to own it, if you're going to be responsible, if it's going to be a model that you have to use and you have to operate, yes, I would encourage that. Otherwise, you're always going to get in trouble. There's always going to be mistakes. Yes.
So as an aside, what's the worst that you've seen someone do to a financial model? The model you showed was very simple and clean, and I suspect that's what makes it a good model. Would you be at liberty to show the students an example of a terrible model?
Sure. I pulled one up here, and this is not the worst model I've ever seen, but this model that I'm going to show you violates many of the conventions that I shared, and I'll show it here quickly. First of all, what I would say, now this model actually does, I assume you can see it now, Stevenson. This is called Project Tundra.
Yeah.
Was a corporate model that we received. We did not build it. So first of all, how do you know if a model is a good model or a bad model? It's going to sound funny, but if you can follow along, if you can understand, you remember in the talk, I said that in a good model, I said that you can understand every formula. It has to work electronically and it has to work on paper. Let me just quickly come back to my notes here. These were the notes from my session. And I believe that I said here, a good model has to work in two different ways. Electronically, that means every formula has to make sense. And you should be able to say, aha, I understand. And it has to work on paper. You'll remember that when I showed you the Henderson model, it works as a nice presentation. Well, now let me show you an example of a model that violates all of that. Here's a model. It's called Project Tundra. It's for a large, I believe it's a wind project. First of all, look how many sheets there are. As I go through, look at all the different sheets that are in this model, and they're not consistent. So already people are going to get very, very uncomfortable, feel very nervous, because as I go through, every page looks a little different. There's coloring. I'm still going. There's a lot of sheets all over. I'm keep going all over. Every page looks a little bit different. Nothing is print. Like I'm still going. I am still going. Look how many sheets there are. There's way too many sheets with colors everywhere. And look, I just clicked on this one cell. This is a black number. It's got yellow shading. I don't know what it means, but it's an input. Black numbers are supposed to be calculations. So I keeps going and going and going and going. There's 20 or 30 different sheets. They're all inconsistent. They're not printable. Let me show you an example of one that I noticed earlier that had a formula that was very hard to follow. Remember I told you that a formula has to be easy to follow, easy to understand? Well, look at this formula here. This is an example of a formula. It's not even the worst. This is not the worst I have ever seen, but this is not great. Look, it's linking to a cell on one sheet. It's multiplying by another cell on a different sheet. And then it's taking a cell on one sheet, adding another cell on that sheet, and then multiplying by another cell somewhere else. I don't know what these cells are or what they mean. And there are hundreds and hundreds of formulas in this model that are doing that. Look, more everywhere you go, formulas are linking to different sheets. I promise you, one of them is probably linking to the wrong spot. It's hard to see, it's hard to find, it's hard to catch, and it makes it very difficult to use. So if you ever feel frustrated with the model, if you don't understand it, it can be better. And I would encourage you to think about what we talked about. Look here, in our model, all the formulas are simple. They flow. Everything, as you go down the page, it flows. It's like a waterfall. Everything works its way down, and you can do this. And when you do it, your models will be very well received. So that's an example. I don't usually show bad models, Stevenson, but you asked for one, so I thought I'd show one just so people know, and you'll know, guys. Do we have time for one or two more quickly?
Yeah. To be honest, I don't feel that was a bad model because it reminded me of my own models. But anyway.
Well, then I'm sure it wasn't. Your models are, I'm sure, are very good, Stevenson, but we'll let the students, we'll let the participants decide what they thought.
So from personal experience, what would you consider to be the hardest thing to model in a standard financial statement?
Usually people get most scared about modeling the capital structure, modeling debt. And I believe you even mentioned that when we started our call here, you mentioned that you don't enjoy modeling debt. People make a real mess modeling debt and equity. So if you look at the debt in the Henderson model, if you look at how nicely it's designed and how nicely it's organized, that's what ensures that the debt can work well. And in our video, so at the FMI, for people who are studying for the AFM level, we have a tutorial series to help people prepare for the exam. And we have a whole chapter on modeling debt and equity. And we go through exactly what it means to model a piece of debt and all the company's debt. And if you do it in a very clean, organized way, it's really not a big deal. It should not be difficult, but people often make it very difficult and then they get very frustrated. So that's the one area where people often get into a lot of trouble.
What are the career prospects that are available for financial modelers? Like what kind of jobs are available and how much should they expect to make? I'm sure the students might be very interested about this.
No way. I don't believe that they would be interested in that. No, I'm just kidding. I'm sure they are, and they should be. You know, financial modeling, as I mentioned in the webinar, has become one of the most important skills for junior professionals. It's not the only skill, but it's the foundation. It's so important to know how to build models because it allows you to build the tools that are used to make so many critical financial decisions. So what types of jobs are people looking for? What types of jobs do they need people with modeling skills? Well, if you want to go work in finance at a big company, in corporate development, if you want to work in credit and really climb the ladder in the world of credit, you need to understand companies and be close to understand models. If you ever want to go work in private equity or in research or in investment banking, or even in corporate finance roles within large accounting firms, if you want to work at PwC or Deloitte, a lot of those organizations want their finance professionals to have modeling skills. In fact, some of them use the FMI's exams internally as a tool and a test to make sure that people on their finance teams have appropriate modeling skills. So there's a lot of really great jobs that require people to have strong modeling skills. It's harder for me to speak about compensation only because It's regional a little bit, and it depends on where people are going to go. But I can tell you, in whichever market you are looking in, the jobs that require strong modeling skills will be amongst the highest paid jobs of people going into the world of finance. Asset management, I didn't mention. If you want to work at a pension fund, on the buy side, in asset management, at a hedge fund, you need to understand modeling. And those jobs pay the best for people who have really strong skills.
So the demand is there.
The demand is there
for those types of skills.
People are putting it on job postings, Stevenson. More than ever before, organizations are putting on their job postings. They're saying, we are looking for people with strong modeling skills. So yes, the demand for modeling skills is there.
Okay, great. Thank you for answering our questions, Ian.
Stevenson, thank you very much for moderating, for having me again. I want to thank you. I want to thank the CFA Society, and I want to thank all the participants who've been watching me talk for a long time. It's been really a thrill to be here with you. I can feel your energy in this room, being here all across the world in Canada, and I hope that you're in touch. And if you have questions, let us know. And I want to wish you all the best in your starting your careers and in your financial modeling skills development. Thank you.
Thank you so much, Ian and Stevenson, for those insights. We're already 50% through the PGFIS 2021. We're done with 2 out of 4 days. Can you believe that? Before we wrap up today's session, let me just announce the winner of 2 truths and a myth. This was the game held earlier during the break. The 2 winners are Joyce, Ann Castillo, and Chelsea Dario. Congratulations. So you're in this room. Well, sana all. Please send the CFA Society Philippines a message through the PGFIS Facebook page for instructions how to redeem your certificate prize funded by call. And please don't forget to do your evaluation form. Those are available on your CFA Society Philippines mobile application. Remember that the evaluation form is part of the requirement to get your certificate. And of course, allow me to acknowledge and thank again Stevenson and Ian for today's sessions. Let me just read out the certificate citation. So this certificate of recognition, CFA Society Philippines presents this to Ian Schnoor, CFA, speaker, and Stevenson Yu, CFA, moderator for the session on best practices in financial modeling at the Philippine Junior Finance and Investment Summit 2021. The future starts now. So tomorrow is day 3. I've seen the witty hashtags, nan-day 2 na ako, in addition to our official hashtags. So props to whoever thought of those. Before we wrap up, let me just, on behalf of CFA Society Philippines, thank our sponsors, our platinum sponsor, MSCI Philippines, our gold sponsors, AP Securities and Call Financial Group, our silver sponsors, Atram Trust, DBP Daiwa, and Papa Securities. We also have our media partners, Business World and Business Mirror, and this event wouldn't have been possible without our event partners as well, the Bureau of the Treasury, the Philippine Stock Exchange, and the Securities and Exchange Commission. So that was day 2, guys. I hope you got a lot of insights, and we'll see you again tomorrow for day 3 of the Philippine Junior Finance and Investment Summit 2021. The future starts now. Stay safe and thank you. Have a good rest of the evening.